Now a lesson in currency. This is currency, it's paper that you use, versus money. This is money. This is a roll. Many people have never seen this. For those of you who know what you're doing, you have not only seen this, but you probably have many of these. So, let's look at currency. Currency is owned by the Federal Reserve, which contracts the money out or loans the money out to the United States. Loans currency. It owns money. Now let's explain this. Currency is what we're all using. It's, nothing inherently evil about currency when you understand what currency is, but notice on currency you have the pyramid where only those at the top, which would be the Federal Reserve people and whoever's above them, or whatever, their group. Let's not get all conspiracy-like. This is fact. This is not, Misto Fisto. Here, with money, this is money. This is not currency. Notice the difference in the logo. You have, above a pyramid, you have justice, within a shield, and a key. Notice that. Now let us look at what money looks like when it comes out of the... if you can get it out. Now, this is a rolls of 20 troy ounces. There's a reason they're called troy ounces, but I'm not going to go into that. And you can see again, let's take some out. This just happens to be a focus camera, there you go. A 2013 silver troy ounce. Hard to get these right now, in high demand. Let's look at the back. And the opposite of what is on currency, a troy ounce of silver is actually 1 full ounce. It's actually 0.9999, something silly. There's a little bit of impurities in it. And you see the eagle is shielded. So it's got a shield, and above, not a triangle going downwards, but a triangle going upwards of 13 stars, representing the original 13 colonies. I think they're 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, yeah, 13. Going upwards. So, printed on this is $1. United States of America. Now, this is actually controlled by the Treasury. This is actually constitutional. A secret group of people do not control this. This is controlled by the government, by the Treasury. This is a private company that loans out the use of this paper stuff to the United States government. Now, why does that matter? Why do you care? This has $1 printed on it, yet its value is probably, I don't know, now it's probably about 30 cents, 50 cents comparatively to what it could purchase before. You go to buy bread now. Sorry that I'm talking in this accent. It just started and it's just sticking with me all morning. So just deal with it. You go to buy bread, it's now $4 or $5, where this dollar used to buy you a loaf of bread. It used to be $1. No, not even the Wonder Bread, a good loaf of bread. Now, inversely, that's with currency, because currency, since they can print as much as they want, endlessly, it's just paper, until they kill all the trees. They can print as much as they want, and even then they can make synthetic paper, so that's not a big deal. Every time these guys, in a little eyeball, print more currency, the value of the currency you hold, all the little digits in your bank account, well, the value goes down. However, inversely, with real money, no matter what matter of fact, money always, real money versus currency, the value goes up. So while what's printed on here really doesn't matter, while $1 is printed on there, this is currently worth, I think, $23 right now, which is very, very artificially low. And it's going to jump very high. You will see. It's being kept held down on purpose, but I'm not going to get into that. It has to do with finagling with stocks and bonds and all this sort of crap. People have certificates. They have stocks in silver, but they don't have the silver. And you see, there's so many stocks in silver, and there does not exist that much silver. So that's a whole nother subject of its own. But notice, what's printed here, the point I'm making, it's very important, is that $1 is printed on here, yet this is worth monetarily, or this can be traded in any place in the world for an amount of currency, any fiat money, anywhere in the world, for about 23 to 24 times what is printed on this. It will be worth the value of silver, which is now being held artificially low. So this always grows. This always goes up, whereas this always goes down. So have an amount of this that you need, but for your savings, for your money, for what you that have some of this. And that's all I'm going to say. And if you're watching this and you understand, you understand. And if you don't, you don't. And that's it. So now hopefully you understand the difference between money and currency. This will, no matter what, no matter if it's United States or, yens or Russian, whatever, or Deutschmarks, doesn't matter. It could be called Kukuju's Kanubi. I have 10,000 Kanubi guns. It doesn't matter. It's just printed, and it has no intrinsic value. What is the word intrinsic value? Intrinsic value means it has no use of its own accord. Whereas silver, even more so than gold, silver is in everything. Silver is in this camera that's recording this right now. Silver is in every computer. Silver is in every TV. Silver has health uses. Silver is the amount of uses of silver. It has intrinsic value past just being a store of wealth. And that is the difference between money and currency. Enjoy. This has been Blackout with One to Know On.
Okay, let's talk about the gold standard now, just so you can understand. And we're going to talk more about this in a lot more detail in subsequent events coming up. In fact, I have Larry Hilton, who is a good friend of mine, who I actually served with as a delegate in our state back in 2010, and he's an attorney and a successful businessman, and he's put together and actually wrote some legislation that was passed in the state we live in here that recognizes gold and silver as legal tender, and we can actually use it to purchase legally in the state of Utah, purchase goods and services. Anyway, he'll be speaking to us about the value of gold and the use of it in a proper format in today's society, in tandem with a fiat system. And I look forward to having him coming on. But a gold standard is where, like it talked about, when in 1971, when Nixon relinquished that or got rid of it, was really the demise of stability. For example, here's two examples. In 1961, a silver dime, which was actually minted in real silver, was enough money to buy a nice loaf of bread. And today, one of those exact dimes, minted with real silver in it, actually will buy the same loaf of bread. And the reality of it is that the value of that metal has not changed. The intrinsic value is still there. Another example, okay, and again I'm using silver here, but the concept is the same with silver and gold. Just to show you a broader timeline and a historical proof, let's take a visit to the Old Testament. Joseph, who was sold into Egypt, by his brothers into the slave trade for the price that was charged for a teenage man or teenage boy slave, 20 pieces of silver. Okay, so let's fast forward into our past, but into Joseph's future, 2,000 years. to the time of Christ. Christ was betrayed for the amount of silver that was determined back 2,000 years prior for the price of an adult male slave, 30 pieces of silver. And it actually spells it out in the Old Testament, the exact measurements of what a slave was worth. A teenage boy, a teenage girl, and a full-grown woman were sold for 20 pieces of silver. And a man, full-grown man, an adult man, was sold for 30. And 2,000 years later, that was still the rate. That just goes to show that gold and silver hold an intrinsic value and a stabilizing, in a stabilizing manner on the economy. Okay. There also are some other benefits, and Larry will explain these a lot more in our next segment, or when I'm able to get him here. That when you're dealing with an intrinsic value-based currency, or money, as it's described in the previous video, you're dealing with no tax, because if you sell something for gold and you are paid in gold, the value was there all along, and so there's no capital gains, so you don't have to pay as much tax or any tax. And Larry goes into a lot more detail with this. I'm not going to belabor that anymore. He'll share with you how that works. Very intriguing concept. But the reality of it is that we live in an economic bubble globally. Every nation is involved, and not just a bubble that affects your country alone, but your bubble, my bubble, your neighboring country's bubble, or I should say the bubbles, because there's multiple bubbles in an economy, are all connected. And some have popped and deflated already, some are under strain, some are in the process of deflating, they haven't completely emptied yet. But what we're dealing with is still a big a facade. It's a ruse to get you to think that all is well and everything is going good and that there is recovery, when really we're not looking at a recovery in our economies. We're looking at a reset, and it's not going to be pretty. But the reality of it is, what does this mean for us as traders? What it means for us as traders is that we need to be able to make hay while the sun shines, use the system with the volatility that it has to make our money. But what I suggest, working together as a team to keep our eyes on the market, spot things, keep each other informed, stay connected with the community that we've created. But what I'm suggesting is that you need to take a portion of what you're making each month from your trading and invest it into something tangible and real, like gold and silver. And we're going to talk about how to do that and the different ways to do it effectively here. But it's really, I mean, if you look at the reality of it, it's going and spending. The price for 1 ounce of silver right now, today, at this recording, was $21.19, I believe. And what we're dealing with is, if you spent that much a week on 1 troy ounce of silver, for example, and you kept doing that, what you're doing is dollar cost averaging. And we're going to explain that in a future presentation as well, as to how dollar cost averaging can help you in your investing. And this is going to help you be able to capture more shares of that asset, and to be able to get a much better price over time with that asset, and preserve the opportunity to keep purchasing while you're gaining the value out of that.